Hey everyone, this is Steve Dietz, co-founder of Goldrush Yield Fund. Our fund occupies a very unique space and we find ourselves answering similarly unique questions. I'm here today with my co-founder Greyson Geiler, and today we're just going to talk about the basics of the fund and what we hope to accomplish with this. So please send us your questions and we'll get together weekly to discuss this in more detail. But first here, Grayson, can you go ahead and kick us off and kind of explain to us, the basics of why we started this whole thing and where we're trying to go with it.
Sure. Thanks for the intro, Steve. So let me start with this. Gold is money. That's a very unique concept, strangely enough, but gold is money. Gold is not an investment. So when you see a lot of the financial pundits talking about, well, let's compare gold versus the S&P 500, those are two different things. You want to compare a stack of gold in your closet with a stack of US dollars in your closet and see how the purchasing power over time rolls out. That's a legitimate comparison. So what we're trying to do with the fund here is invest our gold. So we buy gold. People wire US dollars to us, but we are buying the actual physical metal. And then we're investing it. We're deploying into leases and bonds, gold denominated in ounces, into leases and bonds that pay interest in ounces, in gold and silver. So very unique proposition, right? The marketplace is really expanding. Now, one thing I guess I'm preemptively answering a question that hasn't come in through this mechanism, but I've heard repeatedly in the past is, well, why would I buy gold? I mean, this is almost a Warren Buffett sort of thing. Why would you buy gold? It just sits there and doesn't do anything. It's not an investment. Correct. So now we can invest it. So people can consider gold has gotten so many headlines recently that, of course, oh, you got to buy gold. Well, if I put it in my closet, then what? Pretty intuitive when I tell people, hey, there's an interest rate on gold again. Rather than having gold sitting in your closet, why don't you deploy it into businesses that are going to pay you interest in ounces? And that's assuming the risk is mitigated. That's pretty intuitive to people. Where I run into some challenges is people don't seem to understand, well, why would anyone lease or borrow gold from you and pay you interest in ounces? So that's probably a good place to spend some time, Steve, and let's talk about the businesses that are in the metals space and why would they want to borrow gold. The obvious example is a gold mine. Well, if a gold mine they haven't drugged the gold out of the ground yet. Let's say they have a deposit of $100 million worth of gold still underground. It's going to cost them a lot of money to get it out. We could spend $50 million, get $100 million worth of gold out of the ground, and hey, we just made $50 million. That's great. Problem is, what if the price of gold gets cut in half? Because your liabilities are in US dollars. You owe 50 million US dollars. Your assets and income stream in gold. What if that's only worth $50 million? Well, now you're insolvent. That's the big challenge. So people say, oh, well, what if we thought in ounces? If we think in terms of ounces, maybe there's 100,000 ounces in the ground of gold. Well, let's borrow 50,000 ounces worth of gold. Yes, we are going to sell it. We're going to pay payroll. We're going to buy trucks and all that kind of stuff to get gold out of the ground, but we owe gold. We don't owe US dollars. So if the price of gold gets cut in half, we only owe 50,000 ounces. We're still going to get the 100,000 ounces of gold out of the ground, and we're still holding 50,000 ounces of gold. Now, maybe we didn't make as much in US dollars because the price of gold went down in US dollars, but we don't have any price risk. We don't have any risk that what we owe is going to be worth a lot more than what we make. So that's where I like to start with, to explain to people, hey, this is an expanding business. There are a lot of companies out there, more than you would think, that are in the metal space and they just don't want the price risk. So they want their capital. They want to get their capital in terms of gold and silver ounces. They'll pay the interest in terms of gold and silver ounces, so that they don't run into financial trouble with a mismatch of assets. Does that help getting us started, Steve?
I think so. You and I have been around the commodities and futures business for 30 years. People will ask us, well, why didn't they just hedge it off with the futures? Well, it's just not a perfect match anymore. There's a lot of
No,
moving parts in that.
not at all. And if you watch those marketplaces closely, the last 2 weeks have been the perfect example of why that's so dangerous. Those futures contracts ran out of liquidity. There was a couple of hours in the trading day last week, or 2 weeks ago, where there just was not a bid. So if somebody was trying to get out, there is no way out. And so it can be a really dangerous. There's no perfect hedge from that perspective. So why not just match up your assets and your liabilities in gold?
Right.
And you then, as the gold producer, you don't have any price risk. Well, where'd that price risk go? Price risk doesn't just go away. Well, to the gold holder. There are a lot of us that, we've been watching the Federal Reserve and their mismanagement of things for decades. We're going to own gold. The price risk, we'll take it. Price goes up, yay. Price goes down, okay, we'll keep holding. So if there are businesses that want to pay us an interest rate to take the price risk we're already taking, that's just fine.
Right. That's what I really love about what we're doing is that the back end of this it creates such a more efficient marketplace, if that makes sense, and stuff. And
Yeah.
it's a real benefit to the businesses on the back end of this thing, and it keeps us in the position that we want to be in the first place.
Absolutely. Yeah. So a couple of logistics about the fund. This is for accredited investors only. Right now, we are answering questions that people ask us. This is not to be construed as investment advice. We know nothing about your specific situation, but our contact information is included in this communication. So, hey, feel free to reach out to us if you want to go through what we're doing in more detail. And again, like Steve said, we are going to be doing these Q&A videos weekly. That's all I got, Steve.
Yep, that sounds good. And as we go forward, we'll dive into some more mechanics, and kind of how these things do fit portfolio wise for people, and just the logistics of how all this works. So looking forward to it.
Thanks, man. Talk soon.